Welcome to the BF Anderson Technical Report for September the 30th. Let's get right into the charts here. This is the S&P 500. As you can see, since the beginning of the year, which we start 16 here, big drop, big shakeout, uptrend, more shakeout, but then we've stabilized. We have stabilized in this basic area between 2150 and say 2200. Now, we're having corrections which are normal. However, the S&P is not holding up as well as the NASDAQ. In fact, there's like two separate markets. If you look at the NASDAQ, you're going to see the same basic pattern, the shakeout, but then you got the breakout to new highs, which you're pretty much holding. And you're also staying above the 25-day and the 50-day moving average. So what's going on within the S&P is that the energy stocks continue to show, tremendous weakness in here. We got a rally this week due to the OPEC production cuts, or they're predicting production cuts. But anyway, oil is holding the S&P down. Also, if we look at the financial stocks, you can see that the banks, the banks are really having a tough time here, below their base, below both moving averages, and the 25-day moving average has turned down. Now, what's happening there, as we know, is that there's problems in Europe, mainly Germany. Deutsche Bank concerned about bailout type of situation there. Now, the strongest sector in the market, which is very growthy and very positive, is technology. This is the Technology Select Fund. And you can see the tech stocks have broken out of the base along with the NASDAQ, have held above the base. We're also seeing a rising 25-day moving average and a rising 50-day moving average. This is very, very positive. Now, kind of to look at some stocks that are considered in the group, would be a stock like Facebook. Continues to stay in a very nice uptrend. Now remember, revenues this year expected to be up 51%, and earnings are expected to be up 73%. So this is one of the strongest sectors of the market, would be a stock like Facebook. Now another one that's kind of an old name, been around for a long time and acting well, is Intel. You can see the uptrend, very strong. This is again confirming the tech group as being one of the strongest groups. Now, one thing I did want to mention here briefly, just to kind of talk about. Notice this is Priceline, and you've got a stock here that's roughly $1,500 a share. And a lot of people get really hung up on share price. Look, when an institution, now realize institutions control about 85% of all the volume on all the exchanges. We're talking large pension plans, mutual funds, hedge funds. These are large buyers of stock. They buy millions of shares, so they pretty much drive the stock price. Well, they don't care if it's a $1,500 stock. All they care about is the fact that this is a $72 billion company. Now, market capitalization is very easy to figure out. You just take the shares outstanding times price. So the name of the game, in my opinion, is to find a company with a small market cap that's going to grow into a large market cap, and the share price is fairly irrelevant. You really don't want to pay too much attention to that. So what the institutional investors are looking at is things like earnings and revenue growth, and they look at market cap. And if you find a stock like this, by the way, Priceline's acting extremely well, just buy fewer shares. Instead of buying 100 shares, buy 10 shares. Now, let's talk about IPOs for a minute. Alan Greenspan was interviewed recently, and he said the biggest problem in this country is a couple things. One is the entitlement growth is too much. And this is, by the way, this is the politicians that are running for president, both Trump and Clinton. Nobody's talking about the growth of entitlements. Entitlements have been going up 9% a year since 1965, and under Obamacare and other factors, the entitlement problem is getting worse, not better. Now, this is, of course, we're $20 trillion in debt. We've got to do something about this. But anyway, the way you solve the productivity problem is you get capital into the hands of entrepreneurs who are growing companies that are hiring people and creating good jobs. So the IPO market, it's really, really critical that the IPO market stays strong and healthy. Now, here's an example. This is a company called Shopify. They went public last June. As you can see, the stock ran up dramatically. Now, realize that the whole purpose of an IPO is to create liquidity for the founders of the company. Now, that could be individuals, that could be corporations, that could be venture capital funds, various people. As the private company is being developed, until it goes public, there's no liquidity for the founding investors. So once you get the IPO, usually that IPO takes off and has a good rally, but realize that there's probably going to be a slump in there. And the slump is caused by the fact that, a lot of these insiders are deciding to sell their shares in order to diversify, in order to pay taxes, in order to buy a fishing camp, or whatever it is they want to do. But be aware of the fact that usually it's a good idea to wait about 6 months after an IPO just to get through that slump period. As you can see, this thing went from 40, down to 20, and that was quite a dramatic slump. So if the fundamentals of the company are strong enough, the slump will be a temporary thing, and we'll start to see a rally. I would keep an eye on Shopify. This is a very interesting company that allows small businesses to develop e-commerce stores. In other words, sell on the internet. This is a $3.5 billion company. So what are the chances of it becoming an $8 billion company or a $10 billion company? Well, it happens all the time. So back to market cap, if you're looking at a company that's, say, $300 billion or $400 billion in size, can it become $800 billion or $1 trillion? Well, there's never been a company $800 billion to $1 trillion, but that day may come. So in conclusion, what I really want to get across is, and if you just take one more look at the NASDAQ versus the S&P, if we kind of use the graph in a way where we can see, I can't really do that on this, but the S&P has kind of broken down. You can see the movement below the moving averages where the NASDAQ has not. So have a good weekend, and let me know if you have any questions. Thank you.